Markets reporter at Nasdaq. Joining me to discuss Nasdaq's index business in the APAC region is Joyce Ip, head of Asia Pacific Nasdaq Indexes. Joyce, it's great to have you with us. Welcome to Trade Talks, and tell us about Nasdaq's index business in Hong Kong.
Hi, Jill. Thanks for having me today. We are very excited about the development in the market. In Hong Kong, Nasdaq has been working with several partners providing different products in the market using Nasdaq indices. Here in Hong Kong, we have a total of 12 exchange-traded products listed and tracking Nasdaq indices. Let me also highlight some of the key milestones for Nasdaq index business here in Hong Kong. Our first two ETFs were launched in the market 2014. The product is tracking Nasdaq Asia Pacific ex-Japan Dividend Achievers Index, and the other product is tracking the Hong Kong Bank sector. Then in 2016, we launched our first ETF tracking the Nasdaq 100 index. And in the same year, with the introduction of the leverage and inverse products in Hong Kong, we launched a couple of R&I products using our Nasdaq 100 index. And these products help growing the liquidity environment for the Nasdaq 100. In addition to these products using our flagship index, we also work with issuers to develop different products using our Nasdaq indices. In 2018, we worked with BOCI Prudential in Hong Kong, launching an ETF tracking the Nasdaq Overseas China New Economy Top 50 Index. It's one of the examples Nasdaq are working with our partners in the market to deliver new indexes with our expertise.
Joyce, what is the Nasdaq Overseas China New Economy Top 50 Index?
NQCNNEW is the index ticker. We launched the index in March 2018. The index aims to capture the largest Chinese companies from the new economy sectors, which are the key drivers of China's economy. And these companies are listed either in Hong Kong or the US, and we pick the top 50 companies according to the market cap. And in the index, we only capture the companies from the growth-related sectors. And the four sectors are consumer goods, consumer services, healthcare, and technology. These sectors are basically the drivers of the global economy, not only for China. If you look at our Nasdaq 100, these sectors are the major composition of the index, which are driving the performance of the index, particularly this year, which companies involved in innovation and technology has been the focus of the global economy. And if we look at the top 15 constituents in the index, the top 15 companies accounted for around 67% of the index in the end of September. If we look at the right-hand side, you can see the names there. If you're in APAC or in Hong Kong or China, you will be very familiar with these names. And these companies are actually driving the China's economy right now. For example, some big Chinese companies like Tencent, Meituan, Alibaba, Baidu, and JD.com, these companies has more than 35% in the index. These names are influencing people's life, such as like how people making payments, how people rely on online shopping, order food via mobile apps, and the need for entertainment like online games. And you can see these 15 names are not only focusing on the technology companies. For example, Meituan and Pinduoduo are classified as consumer goods companies under ICB. And if you look at BYD, the car maker in China, and the company is classified as consumer goods and has around 3.4% in the index. There's also a biotechnology company, Wuxi, in the index. So this company, together with technology companies, are representing the 21st century industrials, or we call them the new economy companies. And we can look at the next slide about the performance of these companies. Here we look at the individual price performance this year YTD and the performance last year. You can see that 7 out of 15 companies have experienced more than 80% increase in the stock price year to date. And there are 5 companies with the share price doubled this year, including JD.com, PDD, which are US listed, and 1211, which is the car maker BYD, has increased by more than 170% this year. And the other 2 names are 3690, which is Meituan, and 241, which is Alibaba Health. And for the growth this year, you may want to relate it to the shift of the demand for internet-focused, technology-focused companies. But in fact, most of the companies experienced growth also in the last year. So the growth is actually coming from the real demand for the products in the daily lives, and the demand has accelerated due to the current economic situation.
And Joyce, how do you compare that with the old economy index?
So we can look at this slide. It is showing the performance of this index comparing the other market benchmarks. We are comparing against S&P 500, Nasdaq Composite, and the MSCI World Index. The China Economy Index has up 40% year to date, which outperformed all the rest of the market benchmarks this year, as shown in the slide. And MSCI World Index is a broad benchmark covering global equities, and together with S&P 500. These two indices are the traditional benchmarks which have like 30 or 35% in the weightings at, with the traditional industries like financials, utilities, and energy, and basic materials. And when we study this performance of these companies under these industries in the US market for the past 10 years, industry like energy or utilities actually have negative growth in the past 10 years. And the growth of the basic materials is around 15%. So from this slide, we can summarize two key factors like driving the growth of this index. First is the four growth sectors we cover in this index, and second is the growth of the China's economy. And if we look at this next slide, we further look into the index breakdown. On the left-hand side, you can see the breakdown of the four sectors in the index. And you may be surprised that consumer services actually has the highest weighting in the index, which is 46%, followed by the technology companies, which is around 23% in the index. And as mentioned earlier, the constituents in the index are either listed in Hong Kong or US. So the constituents can be assessed by the international investors. And from the breakdown, you can see there's a good balance of companies from the two markets. Like Hong Kong has around 56%, and while US listed Chinese company has around 44%. And on the right-hand side, we also look at the market cap exposure. Around 33 of the companies in the index have market cap higher than 100 billion US dollar. And you can see that in the companies in this index have some mega cap companies, and you are investing some decent companies with the decent market caps.
All right, Joyce, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter.